Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, the 20th of February, 2007, and the market finished with a gain once again today. The S&P 500 spiders were up 37 cents, or about 1/4%. We did see a early shakeout this morning that I think probably trapped some shorts in there. And as we have seen repeatedly in this market, it seems like each time the market breaks down, last week we saw it on a bigger time frame, really, where we saw this bigger breakdown. It trapped these sellers in here and then pushed quickly higher. Well, today we had a mini version of that, or as smart people would say, you could call this a fractal, where it broke support and then kind of had the same type of little pattern where it broke that support, got the weak holders out of the market, the weak longs, brought new shorts in. The market turned around due to some unexpected source of demand, and people who sold had seller's remorse. They quickly bought back, as did the short sellers, and they provided some nice upside here. So we had this nice push higher, followed by picture perfect, a little consolidation on light volume, and then another push higher into this new high territory once again. We're in a bull market. This market should be innocent until proven guilty. These little breakdowns should be looked at suspiciously, especially when we have a rising 5-day moving average like this. And the S&Ps came down right towards that, as well as the daily S2 level. Now, this is a bad print. I don't know why that's on my chart, but I think the lows were right around 145.10 or so. I didn't really notice the exact number. But the point is, we remain in a bull market. If you're selling short, you're fighting the momentum. And why not make your job easier and go with the trend? The Nasdaq 100, like I said over the weekend, it looks like this market is about ready to catch up to the S&P 500. And we did see this market up 34 cents, or 0.76%. So 3 times as strong as the S&P 500. So we're starting to see maybe a little bit of relative strength there. We can see clearly that we have the 10, 20, and 50-day moving averages all rising right now, with the 10 above the 20, above the 50. We had our first signs of distribution over here. Now it looks like the buyers are back in control, and I think we're going to see new highs in here probably this week for the Nasdaq 100. That we'll see new highs for the year, that is. So we've got a great trend here. Don't fight it. Support right now, 44.85 or so, 44.80, let's call it. And it looks like potential for resistance where we might find some sellers up near 45.40, near those old highs. But it's looking good, so stick with it. And the strength the real relative strength continues to be with these mid caps. It's just amazing how strong these mid cap stocks are. You can see that real nice move in here today, 0.7% move, up $1.10 on these mid caps in all-time new high territory. This was the first group after the bear market to make new highs. The only group really, as far as a big market index, and it's just been up month after month in here with a couple little pullbacks. But this market, don't fight that momentum. It comes in, looks like it's going to pause for a little bit, but these buyers push it past resistance level, and now we've got to look at that level at 156.50 as where the support is. So continues to act real strong. Let's stick with the trend. That's where our odds are best served. So the semiconductors continue to be in this just range where they're not doing anything. I pointed out maybe we're going to get some buying above this little trend line here that we can draw in that's been resistance. So keep an eye on that level. It looks like it's pretty valid, as far as it's pretty obvious that trend line has been resistance. So getting above it might help really push this market higher. So I think getting back above 34.80 or so, we could see that the semiconductors move up towards the top end of the range that they've been in for the last 6-7 months or so. Let's take a look at the stocks we had mentioned yesterday. Brooks Automation, we wanted to buy this stock above $16 a share. Today's high was $15.99, so there was no reason to get involved in that trade. I would continue to keep an eye on it, though, because it looks like it's still got the potential to get up and go here. We were looking to buy CyberSource, CYBS, above $12.45. That occurred right here, so you should be in this stock. Let's raise the stop right now to let's raise it to break even in CYBS. And we also got involved in SCUR, Secure Computing. We're looking to buy this one, also on strength. For this one, above 905, our stop was originally going to be at 886, so that you can see that didn't occur. You should still be in the stock. And I would say right now, raise your stop in here up to $9.08. And the bigger winner for today was this GigaMedia, symbol GIGM. What was this high in here? I think it fell just short. If we take a look here, just short of our target, which was 13.5. Hit a high today of $13.48. So it did meet our entry criteria, which was to buy the stock on strength above $12.45. That $12.45 level was taken out quick early on. That's where you should have got involved. It didn't look back at all, so no one should have got stopped out of it. If you're in the stock still, I would say raise your stop at this point up to $13.08 in GIGM.